Hello everyone, I welcome you on board. I am CS Neha Laddha. So here we are with the launch of our first series, knowledge based series, which is on stock market. This is called as Stock Market Patashala. And in the series, the first lecture that is there is on the types of shares. Guys, I think you have heard this word shares before also. You pretty much know the meaning of what is shares. So if I have to tell you what is shares, shares basically means a person's right in the company. When a person invests in the company, that person is called as shareholder, and for whatever investment he is making in the company, he gets share certificate for it. So it's basically a proof which is given by the company that a person has invested in the company. Now let's talk about the types of shares. What are the various types of shares? Yes, I am quite sure you know the answer. The answer is there are two types of shares, equity shares and preference shares. What is the difference between the two? That is something I am here for, to explain you the difference between the two. Let us understand the difference between the two, guys. Equity share capital. The shareholders are called as equity shareholders. Preference share capital. The shareholders are called as preference shareholders. Who are the owners of the company? Equity shares? Preference shares? It's equity shareholders, guys. So the owners of the company are equity shareholders and not the preference shareholders. Then why should I take preference shareholders in the company when I am not the owner? The answer to this question is preference shareholder. The name itself tells you they get preference. They are treated what? Superior to equity shareholders in certain cases. Let me brief you on that. So when I talk about dividend, I hope all of you know what is dividend. It is a part of profit which is given to all the shareholders. So when I talk about preference shareholders, their dividend is fixed and they get a preference over what? Over equity shareholders for dividend. Which means if company has only 100 rupees left and 100 rupees is to be paid to preference shareholders, no dividend would be paid to equity shareholders. But first payment would go to preference shareholders and then equity shareholders are paid. That too if profit is left. If no profit is left, equity shareholders cannot demand dividend. Second point about dividend is preference shareholders get a fixed percentage of dividend which is told to them at the start of the issue itself. So when the shares are subscribed to them, then when the shares are issued to them, in that case only it is told that these preference shareholders would be eligible for dividend at ABC percentage, let's say 12% annum. So fixed percent of interest is paid to the preference shareholder. Is fixed percentage paid to equity shareholder? The answer is no. So here if I have to tell you 1 point to the equity shareholders for being the owners, 2 points I'll give it to the preference shareholders because they have a dividend preference and their dividend is fixed. Now let's talk about what all other preferences they get. So when the company is wound up is closed, first payment is made to the outsiders and after that whatever money is left, who has a preference to get that money back? Obviously preference shareholders. So preference shareholders have a preference or they get a priority to claim their capital back in the case of winding up. If money is not left for equity shareholders, they would not get what? They would not get money in the company. So again +1 for what? +1 for preference shareholders. So that makes a total of 3 for preference shareholders and 1 for equity shareholders. Now next that is there is what? When I talk about preference shareholders, do they get price fluctuation? In the sense, does the share price fluctuate for them? Answer is no. Whatever they have invested, fixed percentage of interest dividend is paid to them and the job is done. But for equity shareholders, if the company is listed, their share price keep increasing, decreasing, and that's where they earn return apart from the dividends as well. So, if when Infosys 25 years back they came, 100 rupees you would have invested in Infosys at that time, today it would have been somewhere around 9,600 rupees. So, in that case, the value of equity share increases, preference shares does not increase. So, +1 for equity shareholders. Now, let's talk about listing. Are preference shareholders listed? The answer is no. Preference shareholders are not listed. Equity shareholders, okay, equity shares are listed. Equity shareholders can exit or enter at any time. Preference shareholders can only exit after a specified time period is over. Should I buy equity shares or should I buy preference shares in the company? So, it depends on multiple questions to be answered in this particular case. Question number 1. Do I want fixed return or I am okay with fluctuating returns? What is my risk appetite? Do I want to hold this for long term or short term? Do I want to be a part of the company or no? So, all these questions would be what? Would be helping me to answer, should I buy equity shares of a company or preference shares of the company? One more thing, guys. Equity shareholders are the owners of the company. So, tomorrow if you hold 2 shares also of Reliance Industries, you are also a owner of Reliance Industries along with Mr. Anil Ambani. He is a owner, you are also a owner, but that is not the case in preference shareholders. So, I hope you understood the entire concept properly. Any doubts, any questions, you can always post those questions back to us. Thank you so much.